How's it going, everyone? My name is Kush. Today, we are going to be discussing the volume profile. So, first of all, what is the volume profile? A volume profile, unlike the regular volume indicator that appears on your TradingView chart, the volume profile tells you where volume is at specific price levels rather than at specific moments in time. Okay? That is very important because, to be quite frank, while seeing the cumulative volume for a day or a unit of time and then matching it up with a candlestick is useful, it is pertinent. Would be even more pertinent is being able to see where volume is picking up at specific price levels, right? So in order to do that, we use the volume profile. So when you try to use this yourself, you simply go onto the indicators right here and you type in volume. Okay. And you'll see over here, there are a lot of different volume profiles. The one that I will show you today, and the main ones that I use are going to be these three that are start. The visible range volume profile, which will give you, as the name implies, a volume profile of the entire visible range of what you see and what's on your screen on the chart. The fixed range volume profile, as the name implies, it is the volume profile of a fixed range. And the session volume profile, which tells you the volume profile in each market session, right? Today, we are going to be using the fixed range volume profile. The reason why is because this gives you an opportunity to understand where you want to be looking at volume. Okay. When you look at a chart, you want to know what levels are really appropriate. Because, like, for example, let's just actually take a step back. I did this, okay? I have the whole chart here now. And I do visible range volume profile. Okay, so I see there's a huge volume node over here. This thick black line over here represents the POC, the point of control. And that tells me the highest volume node, the highest level for volume, right? This is the area where the most amount of trading happened. That's cool and all, but I have all this now, but this is just giving me way too much information now. Price is up here in the 50s. I don't care about what price was doing over here when it was $5, when it was $4, when it was $10, right? I'll care about that if and when price goes down to that level, but it's not really pertinent to me right now. So hence why I don't want to use it. What I instead want to use is the fixed range. So going into it, first of all, I'm going to set my range on here. What do you think should be the fixed range volume profile for this? Give you a second to think about that. And here's the answer. The fixed range volume profile is pertinent to where price is in the market structure. What do I mean by that? Okay, so for example, we have the RKLB chart over here. You'll see why I picked this chart for the explanation in a minute. But we have some very notable things about the chart. For starters, we have this big SR zone over here where price consolidated at for 4 days around and then chopped and went down quite considerably. It passed through the 200-day moving average and then went back higher. Found resistance again over here, broke out, so breakout, retest at the midpoint, and it went higher and higher, and then it's been on this uptrend. Okay? The market dynamics of when price broke out from here are different from when price was down here. Okay? And because I acknowledge that now, I know that all the price action that occurred below here is not that relevant to me. Where I want to have my volume profile is in this area of price. Now you might be asking, well, why this area of price? Because for example, the price went up here, went lower, we went higher, but now we're breaking back into it. So, you know, there is a bit of muddied waters over here, so to speak, right? You don't exactly have it as clear cut as like we broke through here and now price stayed above and this level and then just continue making higher highs and higher lows. Unlike that, in this case, price broke through and now it's back down here, right? And rather than continue, you know, word selling the explanation, I'll just show you why. So the fixed range volume profile, I'm going to do it from, you know what, let's be generous, from this state right here. Okay. Now, this is what the volume profile shows me. To give an explanation first of how to read this chart, the blue is going to be your total bids. The red is going to be the total asks, so buys and sell orders. This black line over here in the middle is your POC, not person of color. All right, it's 2025. We're not about that anti-racism shit. This is about the point of control. Okay, this is the highest volume node that you have on the entire visible range, right? So what price is doing at the most traded level is very important. And that's why it's called the point of control. And these dashed lines over here are mark out the standard deviation of the volume, meaning that around 69.2%, that's one standard deviation, of all the volume that was traded in this entire fixed range occurred between these two dotted lines. This is your standard deviation, and this right here, your POC, you can think of it as your median. For any math or probability and statistics students, this POC is your median, effectively. Now, why did I make my volume profile start from when the breakout occurred? Well, again, it is because the price is above that SR level, and so I am wanting to find information that is pertinent to that SR level. But to take it a step further, I'll demonstrate what happens when you pull the fixed range volume profile back to, say, this swing high, right? And again, you want to pick swing highs or swing lows or areas in the market structure which show a change in the dynamics of the price, right? So we picked this one at first because after it was over here, this marked a pretty big change. Like price continued making a high over here, higher low over here, higher high over here, higher low over here, right? And, you know, like this area right here was a specific market dynamic, really continued up, 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 formed its high, and then went down, right? Back to the 200-day moving average. Likewise, this dynamic over here is very different. So let's pull it up to here and see what's up. Oh, so that's what's up. I pulled a volume profile down to this area that is not pertinent to me. And now I don't have a POC to work with. Now I don't have a value area high really to work with. Price has not even touched it yet. Now I don't have a value area low to work with, right? Which is what these dotted lines are. This is the value area high, the value area low, and again, your POC, right? So you can see immediately that this is a lot less satisfactory for our analysis. So again, I'm going to shift it to the right over here. But before I do that, actually, this is a great opportunity to, what's it called? Sorry, just reading a text. This is a great opportunity to discuss the idea of volume shelves. Now, that is actually one of the most useful parts of the volume profile. Simply put, a volume shelf tells you where a huge chunk of orders are, and it is a shelf because it juts out of the cabinet, so to speak, right? Imagine you have a wall. Okay, this is the wall, and the shelf is jutting out of there, and then you can put stuff on there. Likewise, you can expect price to hold at these shelves. When it's coming off the wall, you can expect price to bounce off of these shelves and hold itself together. It's found support. So these shelves act as both magnets and also support and resistance zones. Okay, they'll be areas where price will bounce off of and be attracted to. So in this case, I'd like to mark out a couple of different shelves. For starters, you have this big one right here. First, what I'd like to do is let's visualize exactly what defines the shelf. So if you look over here, this is about like where this area is. This is the wall. Let's put it in those terms. And you can see over here, price like really stuck around this range. And then this right here is your shelf. Okay. And then when you get back into here, you can see that you have another little bit of a wall right here. And then you have a giant shelf right here, a bit of a gap in liquidity right here, and again, a giant shelf right here. Okay. Now look at what price does when it is in these different areas, right? So when price is in the wall, price explodes to the upside or the downside. It moves like butter, okay? You can see over here, price made it to these levels. This was a new all-time high. And think about it, when you're at all-time highs, you're in price discovery, right? Price will now discover its fair value. It has nothing to go off of. This is uncharted waters. So when price is moving like that, okay, these are low liquidity areas. No trading has occurred over here. So it is completely natural then that the volume on these breakouts will be very low. Now, what happened as it went higher? It started ranging, right? And this chop right here, look at how many, each of these candles is a day. Look at how many days it spent over here, right? That formed this giant ass shelf right here for us, okay? It is the volume profile and the shelf, and what you see from volume is a response and a result of the price action at these levels, right? So if you're seeing a huge block like this, then you can be pretty sure that there is a lot of price action going on right here. If you see a short block like this, you can expect that price is going to be moving like butter, right? So again, look, we had this big shelf, price chopped around for a while, finally broke out again in price discovery. And what is going on with the volume? Super low. So the way I use these volume profiles in the shelves is very simple. For one, and let me just clean up the chart now. For one, let's move this back to here to have it relevant to us again. And again, you see the same thing. Wall over here, shelf right over here. Okay? You can see price chopped around for a while. It dipped down and held within the value area low. You see price found resistance at the value area high. It's not a coincidence that the value area high is lining up with the support and resistance level that I drew out, right? And then you can see over here, price broke out. Volume was incredibly low. You had another smaller shelf being formed right over here. Okay. And it is a shelf because look at how big that is compared to this, right? And of course, why did that shelf get formed? It's because price chopped around here for a while, There's a lot of trading days that occurred over here, so it has a lot more time to accumulate volume. Okay. Now, when I see a setup like this, I'm seeing price forming a shelf, chopping around here. I have a low volume wall, and then I have another shelf with my main POC down here. This gives me angst. Okay. The reason why is because I know that price is moving towards where liquidity is. Price is searching for a fair value, and the best way it can find fair value is by going to where the most market participants are, right? If you and I, for example, I have a pencil and you have money, okay? And I think this pencil is worth $5 and you think it's worth 2, right? We have wildly different perceptions of what the value is. But if we had 100 different people, okay, and 50 of them have pencils and 50 have cash, all those different people are going to come together and start negotiating, and we can come closer, much, much closer to an aggregate that is really representative of fair value. And likewise, that's why price goes towards these high volume nodes. That's why today, when this happened, and I re-recorded it because I just saw this and it was a perfect setup, price bounced off of the POC. It's not a coincidence. It sought this out because it failed to continue building enough bullish momentum to rise higher and higher. And because of that, it lost its support. It went back into this low volume shelf. So where would the bottom be? Well, my conclusion is that the bottom is going to be either the POC, like again, it did not hold this value area low, right? This is where the shelf really begins. But again, the value area high and the value area low are going to be the weakest parts of the shelf. The strongest is the POC. So I'm looking at it and I'm thinking, well, if it gets like below here, okay, below here, I need to see it hold right here, which it kind of tried to. Then the next day, absolutely fucking tore through that, right? And now today, so it tore through it. My expectation at this point is that it needs to come at the POC. And if it doesn't bounce off the POC, it's going a lot lower. It's going to go a lot lower into the value area highs and lows and the POC that would get formed from this bigger distribution starting from right here, right? And then I would say, okay, well, it didn't hold that. I'm expecting now it to go right here, okay? It didn't do that, obviously. Bounced pretty freaking well today off of that level. So the POC theory held. So volume profiles, you want to use them to mark out levels of liquidity on the chart. Using those levels of liquidity, you can see and anticipate the behavior that price will take, right? If I see price moving back above here, above this value area high, I'm going to be expecting a very quick ramp up into $64 back up here. Why? Because there's just not much volume over here, right? There is not much historical trading. Oh, whoops, wrong one. There's not much historical trading to be an impediment to price moving higher. Where I will expect resistance is going to be at this relative POC over here, and then also the bottom of this shelf. So I'll mark out, for example, this shelf right here, and I mark out the POC of this relative shelf, right? So and I'm going to get into another video explaining how to put all of these different things together. I employ a discretionary system, so sometimes I won't necessarily use a volume profile because I have enough confluence to begin with. But when I use volume profile to trade, I am looking at these three components, looking at where shelves are, marking out the upper and lower boundaries of these shelves, as well as their relative POCs. And then simply, as with everything, trading is a reactive game. It is no different here. I cannot make price predictions when price is right here. I can only have reactions, right? So I'm seeing that price failed to break out. It tried retesting over here, could not get above the EMAs, could not get back into the shelf. and it's getting lower, my reaction then should be I either am neutral, so I don't trade this, or I should be short. But I should not be long on this chart at this point. Why? Because I have the SR level that is confirmed by the volume shelf, okay, and it is officially dipped. I have price touching this POC of this node over here, and it's been going lower, okay? My assumption should be that price wants to go from high liquidity area to other high liquidity area. And in order to do that, then it's failing to get into here, so it's going to get back into this high POC zone. Again, there will be a video coming out pretty soon on how to employ volume profiles and everything I've discussed into a comprehensive discretionary system. And that video is going to be a doozy, but this is just the premise of the volume profile. You have volume in terms of units of price, okay? And then you have low liquidity walls and high liquidity shelves. And price will simply be bouncing back and forth between these shelves. How we know price will go to from one shelf to another, what shelves will be used, we know that based off of the market structure that is forming. And that's why I say everything has to be inducive to confluence. Everything must show some confluence. You cannot simply look at the volume profile on this and say, when price is up here, say, I know what's going to happen. Price is going to go back down to this POC. I don't know that yet here. To be quite honest, I don't know that at this point in time. Okay. What I do know is that if we lose the bottom of the shelf, which we did later, then I can expect it to go to the POC. But it hadn't done that at this point yet. It did that over here. And then I got more confident in that it would go down to the POC, but not up here, right? So you need to be reactive. And how you can be reactive with each of these different things, you need to employ them with a market structure, the real-time price action, and then have a lot of confluence in place together. It will give you a better picture of what is going on and how to trade everything. With that being said, thank you very much for watching. Have a great rest of your night.